Hello everyone. In this video, we will be discussing wave personality. Now, this will help you identify waves a bit more confidently and will hopefully answer some of the questions you might have while you're out practicing your wave counting. So, typical wave properties, or we could say personalities, not only warn us what to expect in the developing wave sequence, but it can also help us determine the market's present location in that higher term sequence, in that higher time frame count, especially when the count you're looking at is a bit unclear. Every so often you will come across a really tough chart and you just won't know where to put those wave labels. Or maybe the opposite could happen. You could be looking at a chart and you might have two or three options, wave counting options that work, that all fit the rules. And either one of those could be the correct option. So it's in these types of situations where knowing a bit about the typical behavior of each wave will help you decide which count fits best. So let's start by going over the typical market sentiment that tends to occur during each individual wave of a developing impulse. So let's start with wave one here. And for this demonstration, let's assume that we are at a bottom, a significant bottom here. So wave ones, after the drop, in this case, a tiny amount of optimism comes back in. People are thinking and hoping that, hey, maybe times might get better. But overall, the market does feel very defeated. Wave ones always have five waves up, of course, as it is a motive wave, but they are usually unremarkable, again, because the market has just finished a wave sequence in the opposite direction. So we could say that typical wave one behavior or personality is a standard impulse that is somewhat unassuming in nature. Now, wave two, wave twos are typically a very deep and a very sharp retracement of wave one, mainly because that pessimism returns. At the low of a wave two, pessimism is often even higher or even worse than at the origin of the wave one, because now everyone's thinking, okay, here we go again. We're back to the bad times, back to this kind of price action. So typical wave two behavior or personality is very pessimistic, and it's common to see very sharp and very deep retracements of the preceding wave one. Now, in wave three, things start to get a bit more interesting. In wave three, there is a turnaround in sentiment. More optimism comes in. There's some volume behind these moves, and we're making new higher highs, etc. Especially the middle of a wave three. There is a lot of optimism in the middle portion of a wave three. This is usually the strongest part of the entire impulsive structure. Fundamentals during a wave three are very, very strong, very good. And the wave becomes a bit of a catalyst for further price movement. So typical wave three action, we could say, is very strong, very decisive, very fast moves on a chart, and it's almost always the easiest wave to recognize because it moves so quickly. Now for wave four, the market tends to see wave fours almost as a surprise, a bit of a surprising disappointment, I suppose we could say. Not as bad as wave two because the strength of wave three that came before it. Wave four does rely a bit on the strength of that wave three. But of course, the market still needs to correct. So wave four will always correct a portion of that preceding wave three. And at this point, everybody is upset and perhaps shocked that the strong advance stopped. But of course, they expect it to continue on. So typical wave four personality is a shallower correction than wave two, not as decisive, and much more optimism. And finally, wave five, optimism hits the peak. There is high participation levels in the market, and this is key. You may have heard somebody say, buy the rumor, sell the news, and this is what they mean. When you notice that everybody starts talking about a trend or everybody wants in on a trend, that's usually a signal to take your money and run. Fundamentals during wave five are still good, but perhaps slightly less positive than wave three. And of course, everybody's still very optimistic. So I hope this gives you just a bit of flavor as far as how the market is feeling during each wave. And this takes practice, of course, but eventually you will get to a point where you can recognize these emotions within the price action and place your wave labels accordingly. And this is the great benefit of using Elliott Wave. We can learn how to translate something that seems pretty innocuous, like prices bouncing around on a chart. We can learn to translate that into something real, very real emotions that are being felt market wide. And it's a bit of a superpower when it comes to market analysis, but that's of course why we love Elliott Wave so much. So at this point, I feel like it'd be good to quickly go back over our 5 waves and just give a few more tips for recognizing them clearly when you're doing wave counts on your own. So let's go through them one more time. Wave one. So we tend not to trade the first wave up in a new sequence. Instead, we wait for 5 waves up to complete first, just to add a bit more confluence that we are starting a new higher degree move. And when I say a 5 wave move up, it doesn't necessarily have to be these 5. It could be this: 1, 2, 3, 4, 5. We like to wait for a very clear 5 wave move first before we start to look for trades, just so that adds a bit more both confidence and confluence to the idea that we are headed, in this case, further to the upside. Wave twos, again, typically a very deep, very sharp retracement, usually a zigzag, and it almost always retraces to at least 50%, most often 61.8 or even more. So if you're unfamiliar with what I mean by retracement or Fibonacci retracement levels, then please check out the video we did on retracements. You'll find that in the Discord, of course. Um, so wave two, the typical behavior, the sharp, very fast retracement is a perfect representation of that pessimism that is still lingering from the larger move down. And in wave three, again, very strong, usually all one color. So in this case, lots of green candles, red candles, of course, for the opposite. Wave three is almost always break the base channel. And again, if you're not certain what I mean when I say base channel, we also have some excellent resources in the Discord to check out. But the break of the base channel occurs right here. This is an excellent sign that you are working a wave three. And finally, wave three almost always travels the distance, a 1.618 extension of wave one. And that's a bit of a mouthful, but essentially what that means is wave three moves 1.6 times the distance of wave one. And you can use the Fibonacci extension tool to see the way I've drawn it, wave three has traveled to that 1.618 extension level. But don't worry, we do have some good resources coming out very soon that will go over wave extensions, so stay tuned for those. Wave four, usually a shallower correction than wave two, because again, the optimism and the strength of wave three is still lingering. Flats and triangles are common here, and this will help you if you're looking at a fresh chart. So if you are looking at a chart for the first time and you're not sure where to begin, but let's say you see a very clear flat pattern or a very clear triangle pattern, you're probably pretty safe with saying, hey, that's probably a wave four. Let's label that a wave four and perhaps reverse engineer a wave three or a wave five and go from there. That might be a excellent springboard for a wave count when you're just not sure where to start. And finally, wave five. Wave five will almost always break past the extreme of wave three here. And if you're familiar with the RSI, we very commonly see RSI divergence between the extremes of wave three and wave five. And this is, of course, a great way to confirm that the entire impulsive sequence is coming to an end, which is a great time to, of course, either move your stop or exit your position completely. And don't worry, we will go over the the additional tools that we like to use and on top of Elliott Wave to assist us in our trading, like the RSI. So I hope that clears up some of the questions about wave labeling. And as always, let us know if you need any clarification or if you have any further questions on anything. We are always here to help. All right, thanks guys.